Hello and welcome to a tranquil journey through the wisdom of John C. Bogle's seminal work, The Little Book of Common Sense Investing. As the day winds down and you prepare for a peaceful night's rest, let us gently explore the profound, yet simple principles that have guided countless investors towards financial serenity. Imagine a soft, calming melody playing in the background as we delve into the core tenets of Bogle's philosophy, a philosophy endorsed by giants like Warren Buffett himself. John Bogle, a true visionary in the world of finance, gifted us with a book that distills the complex world of investing into an accessible, actionable guide. His central message is one of remarkable clarity and compelling logic for the vast majority of investors. The most effective and intelligent strategy is to invest in low-cost index funds and to hold them for the long term. This isn't a strategy filled with thrilling daily trades or speculative gambles, but rather one built on patience, discipline, and an understanding of market mechanics. Let's unpack this foundational idea. What exactly are low-cost index funds? Essentially, an index fund is a type of mutual fund or exchange-traded fund (ETF) that aims to replicate the performance of a specific market index, such as the S&P 500, the Dow Jones Industrial Average, or a total stock market index. Unlike actively managed funds, where a fund manager constantly buys and sells stocks in an attempt to outperform the market, an index fund simply mirrors the composition of its chosen index. If the S&P 500 goes up, your S&P 500 index fund goes up, less a very small fee. If it goes down, your fund goes down in proportion. The beauty of this approach lies in its simplicity and its undeniable effectiveness. Bogle meticulously illustrates how the pursuit of outperforming the market, a pursuit that active managers engage in daily, is a zero-sum game before costs. After accounting for the substantial fees and expenses associated with active management, it becomes a losing game for the vast majority of investors. Active managers, despite their expertise and sophisticated research, consistently struggle to beat market benchmarks over the long run. In fact, studies repeatedly show that a significant percentage of actively managed funds fail to even match their respective benchmarks, let alone outperform them after fees. This brings us to one of Bogle's most powerful insights, the tyranny of costs. Every dollar paid in fees, commissions, and expenses is a dollar that does not work for you. Over decades of investing, even seemingly small differences in expense ratios can compound into enormous differences in your ultimate wealth. Imagine two investors, both earning the same gross return, but one paying 0.1% in fees annually and the other paying 1.5%. Over 30 or 40 years, the investor, paying higher fees, will likely see their final portfolio value diminished by hundreds of thousands, if not millions, of dollars. Bogle's relentless focus on minimizing costs is a cornerstone of his common sense approach. So, if actively managed funds often underperform and charge higher fees, what is the alternative? Bogle's answer is unequivocally the low-cost index fund. By investing in an index fund that tracks a broad market, you are essentially buying a piece of every company in that market. You are no longer betting on the success of a single stock, a single sector, or a single fund manager. Instead, you are betting on the enduring power of capitalism, the innovative spirit of human enterprise, and the long-term growth of the global economy. This diversification inherently reduces risk and smooths out the investment journey, offering a much more predictable and less volatile path to wealth accumulation. Another critical element of Bogle's philosophy is the emphasis on long-term investing. He famously coined the phrase, "stay the course." This means resisting the urge to constantly check your portfolio, to react emotionally to market fluctuations, or to try and time the market. Market timing, the attempt to buy low and sell high by predicting future market movements, is notoriously difficult, even for seasoned professionals, and almost always results in worse returns than simply staying invested. Bogle encourages investors to adopt a passive, patient approach, allowing the power of compounding to work its magic over decades. Think of it this way: when you invest in a broad market index fund, you are owning a diversified portfolio of businesses that will, over time, produce earnings, pay dividends, and ideally grow their value. Economic cycles are inevitable. There will be bull markets and bear markets. However, history demonstrates that over the long term, the stock market has consistently trended upwards. By staying invested through these cycles, you capture the overall growth of the market, avoiding the pitfalls of trying to predict its short-term gyrations. The benefits extend beyond just minimizing fees and staying invested. Index funds are also remarkably tax-efficient. Actively managed funds often engage in frequent buying and selling of securities, which can trigger capital gains distributions to investors. These distributions are taxable events, even if you haven't sold any shares of the fund yourself. Index funds, by contrast, have very low portfolio turnover. They rarely buy or sell holdings, unless the underlying index changes, which is infrequent. This means fewer taxable events and more of your money remaining invested, continuing to compound and grow over time. Bogle's The Little Book of Common Sense. Investing is not just a theoretical treatise. It is a practical guide for anyone, regardless of their financial sophistication. Its beauty lies in its simplicity and its accessibility. You don't need an economics degree or a deep understanding of financial models to grasp its core message. The strategy is straightforward: buy low cost, broadly diversified index funds and hold them for the long term, reinvesting dividends along the way. This simple formula, when adhered to with discipline, has been shown to deliver superior results for the vast majority of individual investors. It's a message that resonated deeply with Warren Buffett, arguably the greatest investor of all time. Buffett has repeatedly praised Bogle's work and his creation of Vanguard, the company Bogle founded to champion low-cost index investing. Buffett has even advised ordinary investors to put their money into low-cost S&P 500 index funds, echoing Bogle's core tenet. This endorsement from such a towering figure in finance underscores the profound validity and power of Bogle's common sense approach. For those who prefer to listen and absorb knowledge, the audiobook version of The Little Book of Common Sense Investing is an excellent resource. It's available on platforms like Audible, typically narrated with clarity and calm, often by voices like Barry Abrams, making it perfect for a relaxed listening experience. The length, usually around 5 to 5 hours and 45 minutes, allows for a thorough yet manageable dive into these essential investment principles. The 10th anniversary edition is particularly noteworthy, as it includes updated data and expands on crucial topics like asset allocation and retirement investing, providing even more detailed guidance for various life stages. In essence, Bogle's book is an invitation to liberate yourself from the anxiety and complexity often associated with investing. It's a call to embrace a strategy that is simple, efficient, and profoundly effective. It's about securing your fair share of market returns without trying to beat the market, which is a game designed to be lost by most. As we gently drift towards slumber, consider the elegance of Bogle's wisdom. It teaches us that investing doesn't have to be complicated, stressful, or costly. It can be a peaceful, disciplined journey towards financial independence, built on the solid foundation of common sense. By understanding and applying these timeless principles, you can approach your financial future with greater confidence and tranquility. May the insights from the Little Book of Common Sense Investing inspire you to make wise and peaceful financial decisions. Rest well, knowing that a clear path to sensible investing exists, and it's within everyone's reach. Good night.